Let's bring on board Dipan Mehta to talk more about the markets and what you should expect going ahead. A very good afternoon to you, Dipan. Thank you so much for joining us on ET Now. And yes, the markets have given up all of its gains. The banking sector actually putting some of the pressure right now. But where do you see the likes of Reliance and HDFC Bank going ahead? No doubt they are the bellwethers. Everyone is counting on them to perform well. HDFC Bank has been a disappointment in that on that front.
Good afternoon, and thank you for having me on your show. See, basically, I think these are mature stocks, and there's no real buying trigger in either Reliance or HDFC Bank. A lot of the variables now have got discounted, and particularly coming to Reliance, I think the next big trigger has to be how they're going to unlock the value in the subsidiaries, whether they're going to split the company or do IPOs, whereby Reliance Industries becomes a holding company, and then they will have a holding company discount coming into play over there. But at these levels, I think a lot of the positives have got discounted. And on the whole, the results which came from both the companies, Reliance and HDFC Bank, were more or less in line. There was nothing surprisingly extraordinarily positive for many of the investors or traders to change their short, medium, or long-term view on the stock performance.
The other thing, Dipan, you have elections already rolling. Soon, the chatter is only going to increase about how many seats, what's really going to be the math, etc. Do you think it's best to take some chips off the table? Many are cautioning of an acutely volatile May. And do you think that old adage of sell in May and go away this time is not going to hold true?
No, see, we have been advocating a cautious view for past several weeks, if not months. And markets have been just going up and up and up. And every time there was a correction, I thought this was the one which would be a deeper correction. By deeper, I mean a 10% type of a correction. And even deeper would be trying to test the 200-day moving average, which hasn't been tested for many, many quarters. So we've been expecting a correction, but I can't understand what could be the trigger for the correction. I just feel that the corporate earnings which have come so far are mildly disappointing and do not justify the present run-up which has taken place in stock prices or the present valuation multiples. So from that point of view, at some point of time, there will be, kind of a shakeout over here when valuations are again, stretched as they are just now. So, and of course, we have the elections coming up also. Even minor disappointments over there can cause volatility. The present earnings season in itself is causing a lot of volatility stock-wise. So on all counts, I think be it valuation, be it liquidity flows, be it the news flow, I just want to be a bit cautious and leave some cash in the portfolio. That cash is strategic. It may not earn any return to you just now, but should there be a deep correction, it's that cash when you deploy it at the bottoms is what generates the alpha in the portfolio over the longer term.
All right, so leave some cash on the table is what Dipan has to say. Cautious on the markets, and as you can see, we are drifting lower. Any scope of recovery actually is getting sold into. But let's find out which are the price volume action of the stocks that are seeing good price volume action in trade today. Ansh is here. Ansh, which are the stocks today?
Right, so in this falling market, we still are seeing some good breakout stocks. So we'll start with Power Finance. As you can see in the chart, stock has given a good breakout from its reverse head and shoulder chart pattern with volumes of over 5 times its average trading volume of last 10 sessions. The stock has also hit 2-month high on intraday basis today. Apart from this, Jubilant Foodworks will also be in focus as the stock has actually given a breakout from its 6-session consolidation pattern. Also, it has also given a breakout from its long-term downward sloping resistance trend line, surpassing about 20 and 50 DMA levels with volume of over 4 times its average trading volume of last 10 sessions. Lastly, REC will be in focus as the stock has actually given a breakout from its falling wedge chart pattern and it has been advancing for 7 consecutive sessions. The breakout was led by volume of over 6 times its average trading volume of last 10 sessions, indicating good participation in today's move. So keep an eye on the stocks.
Leave it at that. The entire Power Financier pack once again buzzing on in the show in trade right now. But Dipan, that's the other thing. I mean, everyone knows that it's time for caution. You were also saying that, not just for weeks, and we've been chatting about it. For months now, you're cautioning that the market is getting a little heaty. But then when you look at names like PFC REC or the way Trent has reacted after its numbers, I mean, all metrics, completely fail and fade away in front of the moves that you see on these kind of stocks. And it just gives you a sense of the insatiable appetite in the market right now.
That's the right thing you said, insatiable appetite. I hope I got the pronunciation right. And it is this appetite for stocks which is keeping the markets at high levels despite broadly disappointing numbers. I mean, look at the earnings season so far. Entire technology pack has disappointed, right from TCS to so many mid-cap stocks. Only one exception, that being KPIT. Across the board in banks, we are seeing a slowdown. Pre-provisioning profits, which is the key metrics to be monitored, is all either flattening up or low or single-digit type of growth rates over there. Then come to some of the other sectors also. Consumption-oriented, excluding Trent, I think has been very disappointing. FMCG, excluding Nestle, has been disappointing. So once you go from sector to sector, you will realize that things are not looking as great. Cement disappointing, except for Ultratech so far. So when you look at the entire spectrum of industries, we do feel that growth rates are slowing. They are doing so because of high base effect and also because of a cyclical slowdown, which we are seeing in many industries. But there is so much of liquidity flow coming into the market through the SIP route, through mutual funds, through portfolio managers. And that's what's keeping the markets elevated at these levels. So a serious correction can only happen if these flows somehow were to be shaken or a pause is kept over there for whatever reason. And I don't know what reason it is, so just preempting you over there. And unless you don't have the liquidity tap turned off for some time, I think markets will remain at these levels. They may not go up higher, but you'll keep on having this rotation in stocks. Like, see what happened today in banking stocks. Despite disappointing numbers, investors bought into banks and sold off maybe some of the other stocks. And coming to a specific question about Trent or REC, PFC, look, in any market, bull or bear market, there'll be always some stocks which will surprise because of their numbers. And typically, in my experience, these numbers come in the beginning of the earnings season, and the real disappointments come towards the end of the earnings season, and we are just at the beginning of this earnings season. So let's just wait and watch. And as I said, that unless the liquidity in some way it gets impacted, I don't think you will have a meaningful correction. So I know I'm talking all over the place, but that's the confusion that we are grappling with at this point of time.
That is the state of the market, right, Kunal? I mean, one day you have a big cash down on a Kotak, HDFC Bank doesn't move at all, but then in the same sector, you have stars like Axis, ICICI Bank pulling it up. And within minutes, the market gives up its gains. You really don't know which way it's headed. Can you read that on the charts, though, that all is well?
Yeah, so far it looks like all is well. But then, I think as Dipan also pointed out that the fragmentation in the market is getting a lot more, visible because this time around, you're not seeing too many large cap names participating in the same gusto. There are few stocks which are, adding more weight to themselves, and I think that's where you're seeing a lot of expectation of performance. The underperforming ones continue to underperform. You tend to see some bit of pickup of price action over there. But net, when you look at the analysis, say in a matter of few weeks, few months or so, then you look at the stronger names getting a lot more stronger. Now, buying these stocks at the peak of momentum is always a bit tricky because the risk reward is definitely not favorable. Momentum, of course, could be another side to look out for. But then I think that's where the biggest quandary of the market is right now, that we are at a point where the indices have hit fresh highs for themselves, but the option in terms of buying stocks is not too much. It's getting a lot more limited.
Right, so that's the word coming in from Kunal as well. For now, at least, is looking that all is well. But yes, all is well, at least for the auto sector in trade today, holding on to good gains. You have real estate sector also holding on to good gains. Is the IT index that's taken a sharp knock, and it has been the top sectoral loser from the word go. But let's bring on board Sharad to understand what's the dealing room buzz right now. Sharad?
Well, yes, in focus is Deepak Nitrate, and what we are gathering from the dealers is in certain baskets, HNI segment has been active, especially in some delivery-based buying. Now, importantly, channel checks suggest that the Dahej plant's expansion, one part might be announced soon, and the expansion is expected to come in the coming weeks. And this is for a value-added product in the phenol segment, and this is basically a part of the forward integration process where this material will be coming from. Now, of course, over the last week, we did know that the phenol spreads are on the upward side, which will actually help aid the operational numbers going ahead for Deepak Nitrate. And interestingly, the stock is up 19% from March lows. And if you look at the technical chart, it's on a verge of a 28-month breakout as well. So do remember that as per channel checks and dealers, Deepak Nitrate, there's certain HNI buying happening in the stock.
Okay, Deepak Nitrite is something that you should hold out for. And of course, tomorrow you'll have Motown declare its April sales data as well. Of course, today the enthusiasm is all around the new SUV launch from M&M, which happened yesterday. And today you're seeing a fabulous stock price action. But let's see which way Motown actually heads. The rural demand recovery clearly has been a big question mark. And that's reflected in the tractor sales as well, or farm equipment sales, which we saw for the previous month as well. So I think, that remains to be seen whether there's going to be a meaningful recovery coming in there or not. But Dipan, just wanted to, get a sense of, for whenever that meaningful correction comes by, which everyone's waiting on, where is it that you would deploy cash, and what is looking attractive, something that you would add to or buy afresh?
I think the outperforming stocks like, trend 30-40% lower. And you mentioned PFC, REC, some of the PSU defense stocks, consumption stocks like Titan, which typically you can't buy in a bull market. I think those are the ones which one would target. Basically, long-term secular growth stories which have run up. And then, a few select sectors. I do feel that pharmaceuticals, will be the outperforming sector over the next 2-3 years or so. Some structural changes are taking place over there, particularly those exporting the US generics market. But slight correction over there would add to the margin of safety, and maybe even some of the private sector banks, the larger ones, to bring about more stability in terms of returns in the portfolio. And all end of the day depends upon, where the stock, what stock price corrects as well before one can take a decision like this. See, no new investment themes are going to come through. It's going to be consumption, capital goods, export-oriented businesses, what we have seen. But it's just that if you get a good quality business at a reasonable valuation, and there are very, very few at reasonable valuation just now. But in a correction, if you get that particular, those kind of stocks, and that's where you should be focusing on.
All right, let's actually put the spotlight on the pharma sector then. Naresh, that's one spot that no one's been talking about of late, and it's actually given up all of its gains in trade today. But what's your take on the pharma sector? Are you seeing any scope of recovery in that one? Do you see any select pockets that look attractive?
So selectively, stocks have been doing well in the pharma pack. If you look at Aurobindo Pharma, the stock came back to a new all-time high, very close to it today. You had a spike in, say, a Lupin of late, which has been doing well. The stock was almost close to the recent highs. So out here, there are many selective moves as such. So the names which I like right now is Aurobindo Pharma, which has broken out, and Dr. Reddy's Laboratories, which has made that base around that 6,000 mark, and 6,500 is a breakout point. So if it sustains above those levels, it could be a much bigger move. So on dips, Dr. Reddy Labs looks interesting, as well as Aurobindo.
Right, so that's the top favorite coming in from Naresh when it comes to the pharma space as well. But actually, let's hear out what Vijay Kedia is betting on right now. He shared his investment rationale for the current bull market and also said the investors should chase the story behind the stocks. Let's hear out.
I had invested in Reliance Infrastructure, as you know, because it is on public domain. So, but as now I'm thinking that maybe that call was wrong. Maybe while I'm talking to you, as of now, I'm thinking maybe that call was wrong. So it's okay. We'll see to it.
But are you holding on to your all other investments, Web of Gems, and even for that matter, Tejas?
Almost Tejas, Network, and all those. Yes, I'm holding. More or less, I'm holding. Maybe I have sold a little bit here and there, just to buy some new companies and all. But I still have a meaningful stake in those companies.
We spoke about Indigo, I think, in 2022. And less than 2 years, and Indigo has doubled. 1,800 has almost become 3,600.
39,800, whatever.
Thank you first on behalf of everybody for identifying it. I'm sure viewers must have benefited from it.
God is real.
But where is the franchise headed now? Because Indigo is the third or the fourth largest airline in the world in terms of market cap. Do you think large money is being made?
I tell you one thing, Nikon. We should always keep our aim high, no? Whenever the promoter of this Indigo sells his shares, no, I always feel ये शेयर बेचता है ना, मैं ले लेता हूँ सारा
क्या
shares.
बात है?
I tell you.
Now we know that who's buying the share in the block deal.
No. I cannot buy because he is selling 2,000 crore, 3,000 crore worth of shares. मेरा औकात उतना है नहीं भाई. So, but always it comes into my mind कि ये शेयर बेचता, मैं कैसे किसको shares ले लूँ. Coming to your point, I feel this is a sunrise sector here. Now, at that time, whatever data I gave to you in 2022 budget day, now everybody is talking about those data. Yeah, 23 budget, I think, not 22, 23 budget. Yeah, 23 budget. Just 1 year.
Yes.
Only 13, 14
Yeah,
months.
23 budget. Yeah.
So I think sky's the limit for this company. And it's not a recommendation, but I am holding my shares. And still 1,50,000 crore market cap here. In this economy, now everybody, I have told there is a quote of mine, Nikunj, that when luxury becomes necessity, a big story is there in the making. I think same thing is happening in this airlines industry. So miles to go.
Where to your mind are the red flags in the market? खतरे की घंटी कहाँ पर रहेगी?
खतरे की घंटी तो रोज चलती है बॉस, रोज यहाँ घंटी बजती है. जब बाजार का घंटी बजता है ना तो सबको लगता है खतरा होने वाला है. जब बंद हो जाता है बाजार तो सबको लगता है खतरे की घंटी बंद हो गई. फिर रात को यूएस का मार्केट देखते हैं, बोलते हैं खतरे की घंटी चालू हो गई.
Well, opportunities where luxury becomes necessity. Dipan, going with that theme, I know trend is something that we've already talked about. No, not quite, though not quite pure luxury. But where else do you find, value and opportunity in any of the names, if you will, within the K-shaped premiumization themes, etc.?
I think specialty retail companies, like say Vedan Fashion, Campus Activewear, Ethos, Landmark Cars, Metro Brands. These are all companies, which last 2-3 quarters have disappointed on the earnings front, but valuations still not have corrected. These stocks may be off 25-30% from their top as well. And a lot of the fluff and speculative activities out of them. But end of the day, these are superb secular growth stories run by managements which are extremely aggressive and have excellent execution capability. So when you look at a 5, 10, 15-year type of a view, I think these are the future stocks which can turn out to be multi-baggers if you buy them at attractive valuations. These are great businesses because the brands have created a moat by themselves. And they're all there on my watch list as a measure of disclosure. We may have been investing in a few of them, but nothing material. But those are the kind of businesses that I'm looking at, like the next Titan, which can come through, or the next trend. And these are great companies, where to find such multi-bagger stocks, just that you need to buy them at the right price.
Kunal, let's talk about where luxury becomes necessity. Let's talk about one of the sectors that has changed on back of the lifestyle changes that you've seen is a huge spike that's come about in all of these alcohol beverage companies and spirits companies. Where do you see value now, given the fact that all of them have seen spectacular rise over the last 1 to 2 years, isn't it?
Well, yes, they have. And I think, few of the stocks, I remember from COVID lows, they've rallied more than 5x to 7x. I think the likes of, for example, Global Spirit, GM Breweries, Radico. I think Radico was almost 150 stock, rupee stock in just about some 4 years back. And that stock has now moved into 1,500, 1,600 plus levels. So many of these stocks, they've done exceptionally well for themselves in the last 3 or 4 years. There are many of the stocks which have recently listed names like Sula, for example. That stock has also done reasonably well post the listing and looks attractive from a medium to longer term play. You have some distilleries which has also looked very attractive. In fact, the stock has recovered more than 50% in the last, I think 1 or 2 months or so from the March lows of 200 to 220 marks. So a lot of fresh names which are looking attractive. The only underperforming name I think in this pack relatively, I think has been United Spirits, because at a point when many of these stocks have given returns of 3x, 4x, 5x on an average, the stock has been a lot more subdued in terms of price performance.
Right, so that is all about the performance coming in on the alcohol beverage companies. But let's put the spotlight actually on the NBFC space. A slew of companies actually have come out with their numbers over the last 2 to 3 trading sessions. NBFCs, like I said, is in focus on back of earnings. Strong commentaries coming in from the likes of Poonawalla FinCorp, from Spandana Spurti. And let's actually hear out what the management had to say on the way forward.
To do the apple-to-apple comparison, We are in top 3 across the NBFC segment. Since you know we operate at 102 branches, but maximum we are gaining market share there. And going forward, whatever guidance we have given, 35 to 40%, I think in the past also we have over-delivered. Going further, we'll stick to our guidance and we are confident of achieving the given guidance. And we are confident while achieving the growth, there will not be any asset quality issue. The new book is performing really well. There is a reduction of GNPA, if you see, from 1.44% to 1.16%, net NPA from 0.78% to 0.59%. So going further also, you can expect further improvement in terms of asset quality.
We will be comfortable with a NIM anywhere between 1375 to 1425. The reason why you saw the uptick was better management of timing, because carrying cost is what we've substantially improved on.
Now that in Q4 we are back to a run rate, which in fact we started in December itself, a run rate of about 700 crores a month disbursement. And in this quarter, we have had almost close to 800 crores of disbursement in a month. So we are looking at somewhere around, you can see about a 15% AUM growth should be back. We have taken a lot of steps in terms of centralizing processes, in terms of strengthening some of our processes. We have also put in a lot of effort in terms of training, in terms of additional checks for our 100% of our loans, we have now started having a credit monitoring from the head office.
We also got the rating upgrade from AA to AA+. So that will also ensure that in next few quarters, our cost of borrowings will come down. So FY25, we are looking at book growth of 17% on retail. So disbursement will be about 24-25%.
So that's the word coming in from all of the NBFC players who we spoken to through the course of the day. But let's hear out what is the BTST trades coming in from our charters for today. And Kunal, over to you. What's your BTST trade?
So I'll go with Bank of Baroda, the stock which apparently is now on the verge of breaking past about the previous major highs of 282, 284 plus levels. So would suggest a buy with a target of 300. Stop loss could be kept at 276. And Power Finance is something which I recommended in the morning. It's done pretty well for itself, reached those targets of 440 plus. So I think traders could look at a fresh buy even at current levels. Targets revised on the upside to 475 and stop loss at 424.
Right. Naresh, what about your closing ideas?
So first would be a buy on LIC Housing Finance with a revised stop loss at 670, target price of 690. Second would be a buy on HDFC MC, which is breakout, stop loss at 3870, target price of 4050.
Okay, let's begin winding up for the day then. Tomorrow, of course, is a trading holiday. But Dipan, Kunal, Naresh, great to have you guys on board with us.
If you like this video, then like, share and subscribe to ET Now.